The dollar versus Canada has moved sharply after much stronger than expected GDP data. I'll talk about the technicals driving this currency pair now after that report. So let's get started. Ahead of the GDP report, the dollar versus Canada had already begun to move to the downside. Was there a leak anyway? We've seen an additional move lower after the report. This is the 5-minute chart showing that price action that has taken the price down below the 140 level, but as you can see, we've rebounded back to the upside, currently trading at 1.4035, just above that 140 level, natural level of either support or resistance. Taking a look at the hourly chart, what does that look like? The move lower took the price below the 50% midpoint of the range since this low right here at the end of October to the high price that we saw at the beginning of November. That level comes in at 1.4013. It might be a close resistance level in addition to above and below the 140 level. We have this swing area going back in time between 140 and 140.07, 7-ish type level. So there is overhead resistance above the 140 level that traders should be aware of, even on the rebound to the upside. On the downside, the 61.8% retracement also corresponds with this swing low, which started this move to the upside, and then we went below that 61.8% here before basing against it and moving back to the upside. So that's going to be a next target on the downside, followed by this swing area. If I go back in time and take a look at the different swing highs and lows, here's a nice ceiling right through back here. Then we break above the ceiling and base against this level, holding support here, before breaking to the downside and seeing increased momentum. We move back to the upside and then find early buyers against the level right through here and push the price higher in trading in the month of November, mid-November. A week or so ago, the price came back down to that level, found support buyers and pushed to the upside. And then if I just fast forward to more to the current price, we are still above that level. But this area remains a key target on the downside, so keep that level in mind. So look for resistance here off the stronger than expected GDP, and down here between the 139.68 to 139.75 should be pretty solid support on at least the first test. If we do break below that level, and the bias would be more negative, looking for further downside momentum. So if we do break below that level, then we look for further momentum to the downside. So that's my look at the dollar versus Canada. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.